So we'll go over the lesson real quick, and then we will look at all of the homework people posted. And then if you have any questions, we can get those answered, and then restart next week where we start really hammering into a lot of detail and stuff. But real quick, so what we or what I mean when I say liquidity void, there's so many different names for it. Some people call it imbalance, some people call it um, fair value gaps. I think what ICT calls it. I call it imbalance, and then they call it liquidity void as well. It's just basically going to be a big move in price, basically like a Sunday gap. So you know how like a Sunday gap, it might like gap up and go fill it. That's kind of what we're talking about. But when we talk about it as imbalance, it's because after they grab the liquidity, they move the market away so aggressively that it actually makes a gap in price. Okay, so if we were looking at this double bottom here, we know that, right, the liquidity is under the equal lows. So once this liquidity is grabbed, right, so we have our down candle through the lows, all right, and I'm gonna have to draw wicks this time on everything, so it might take a little longer, but okay, so we have our candle like this, right? This is our bearish candle through the lows. And then when we see a big bullish engulfing, right, we have a big bullish engulfing candle. And then let's say the candle closes like this, okay? Okay, so this candle was so bullish, right? It closed up here. And what we talk about imbalance is going to be when this candle closes here, this gap in price right here. Okay, so we might see a bearish candle come down, right? A little retracement. And then let's go ahead and put some wicks on this one. Okay. Okay, so it might look like that. And then let's say it continues back up a little bit more. All right, so if we see something like this, the gap right here from the wick on the left, right here, let's make it orange, to the wick on the right, you see this gap in price. That's what we talk about when we say liquidity void or imbalance, okay? It's this gap in price down here that should get filled in. So what we want to look for is price to fill that in. And then we notice that, okay, we have a sniper here. So we're just using this as extra confirmation that price should retrace down into here to fill that gap. And we have our sniper here, right? So it's just going to be extra confirmation that that is a valid sniper because it was so aggressive after grabbing that liquidity that it made a gap in price. And then they're going to trade back down and rebalance price. Okay, so they're going to come back down, fill in the gap, and then that's where we're saying, okay, they filled in the gap. Sometimes they might just fill the gap and we miss our entry on the sniper. Sometimes they will trade all the way down to the 50%. Okay, so sometimes they'll go down here. They'll really fill it in. They'll trade down into the candle a little bit and then reverse. This would be our entry, and this would be our entry though. But that's all we're talking about. So a lot of the times what you want to do is just look for that imbalance at the setup. Usually it's going to be there, but not always. The times that it is there, that's going to be a more valid setup. It's also going to help you identify that this setup has not yet retested, so it hasn't played out yet. So it's still valid. if this candle, you know, came down, let's say right here. Okay, let's say it came down right here. You see how it just missed the open? A lot of times people will want to take the entry here. This would need to be down, but right, because it hasn't retested yet. So if it comes up and then it's ranging and then it comes back down, they'll try to enter here, but really it's already retested. It's filled the imbalance. It's retested this down candle. It just didn't happen to hit the open. Okay, so when we actually can see the gap in price, that's going to help you determine that it is a cleaner and more valid setup because it has not retested at all. Because again, that gap in price, that imbalance is still there. Okay, super simple. So let's go ahead and go look at your GBP up here. Okay, so we're going to take this. All right. So imbalance. So you see how all through here price is filled in, right? There's no gap in price anywhere, right? Right here it went up, came right back down to the wick. Right here, wicked down, traded down, came back to the wick. The area of imbalance we can see is there's some right here. So you see this gap in price, wick came up a little bit, so we're gonna go to that wick. Okay, so there's still some imbalance in here. You see wick on the left here, this gap in price to the wick on the right. Okay, that's really the only gap we see, right? See how this is all filled in? There's no gaps in price, okay, except for here. Then we see price taking out the equal lows. Let's make this is going to be our area of liquidity. Okay, so this is our institutional setup that we're going to be watching. So this down candle, right? Down candle, grab liquidity, bullish engulfing. We know that that is going to be our sniper, or you can look at that as a kill shot as well. Remember, I showed you both sides of it. Okay. Once this candle closes, right, it has to close first because this could still retrace back down and not even close bullish engulfing. So you have to wait for this candle to close, which we're on the 2-hour time frame. Okay, it just closed, right? So the imbalance will be the wick on the left right here to the wick on the right of this down or this little candle right here. This is the imbalance. So what we would say is price should come down, fill in this imbalance, hitting our entry, and then go up and start filling in this imbalance up here. But above that imbalance, we can see these equal highs, right? So price should take out equal highs as well. So that's why we're going to target these equal highs. So that's liquidity above the highs. So you should take profit right at the highs, but price will likely wick up a little bit above the highs, right? Because it's going to grab the liquidity. But this is exactly what we should be looking for. Textbook setup. Again, let's look. If we take this high here, there's no imbalance, right? Everything is filled in. Everything's filled in, filled in, filled in. There was a little bit of a gap here, but obviously got filled in here. There was imbalance right here, but it got filled in right here. There's nothing down here, nothing here, but we've noted, okay, equal highs. We know there's gonna be liquidity up here. We've noted our imbalance here on this candle, and then we noted equal lows here, little bitty spike down through it, bullish engulfing, and then once it grabbed all the liquidity here and moved up, it created imbalance here. So we're saying price is going to retest, fill this imbalance, hit our entry on this institutional candle, go up, filling this imbalance, and eventually taking out these equal highs up here. So that's exactly what we look for. So we would be entering a long position here, stop loss below this low, So see how 20.5 is right at the low? We need to give it some breathing room. So let's just do 25 pips to make sure it's okay. And we would be targeting these equal highs right here. But we're just going to take profit at the highs. But you can see that's about 120 pips. And then now we want to round everything up. So go ahead and click this purple line. So 88850. Okay, and then on here, that means we need to do 88850 as well for our entry. And then we're going to target 120 pips. And our stop loss is 25 pips. So this is exactly what your trade should look like, step by step by step. Okay. Then we would just wait for our entry. This is where we've done our analysis during the day. And now we're just waiting for price to get there. So we would just wait. Okay. Price wick down a little bit more. So we're going to move our line here because now this area got filled in, but there's still imbalance on the downside there. And then you can see price ranges a little bit, creating more equal lows here, right? But then it spikes down, fills the imbalance, wicks our entry, goes up perfectly. Wicks above the highs, creating or grabbing liquidity above the highs, hitting our take profit. Does that all make sense right there? How everything just kind of aligns together right there. Because if you can't see this textbook example, it's going to be difficult and we're going to have to touch up on some stuff. So let me know in the chat if that makes sense. Okay, Mohammed says, why does the imbalance happen? So imbalance is because the move is so aggressive that it gaps. So like right here, likely this is going to be a retail trend line, right? Right, retail trend line. Retail traders will be buying in here. And so they're buying, 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 and then boom, they take out the market really aggressively to hit stop losses and take out retail traders. Here, liquidity grab to the lows, big bullish engulfing, trading away. Because if they're stuck down here in shorts, they're gonna trade away aggressively, and then come back later and fill it in. Okay. Makes sense. Yes, 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 yes. It's super clean. Perfect. Did the wick at the top create another sniper on a lower time frame for a sell? So you're talking about here? Okay. Let's see. So this is the candle that grabbed liquidity. And we can now just look at other time frames, right? You can use multi-time frames. Okay, so right here, see this bullish move up? Remember, our highs are right here. So that is a bullish move up, bearish engulfing there. So we can look at this. But let's go ahead and keep looking at other time frames. Okay, you can see it up here as well. So yeah, that might be a retest entry for next week. Probably up here. You see it way up here? And see how there's imbalance? Wick on the left, wick on the right. So if we're entering here, you see how small our stop loss would be? Like, look at this. We would only need to risk 6 pips. You can see equal highs here, some highs here. So what we might see is retracement back up, hit our entry, and then we would look for the short. Probably would target these lows here. If that played out, that's a 1 to 10 risk to reward ratio. We're risking 6 pips to make about 60. But that's what we would look for. All right, let's go look at AU. let me find my trade. Okay. Trying to show you what I was looking at this morning when I sent that trade out. Where was it? I entered on the 5-minute. I'm trying to see my exact trade. Okay, so this is where I entered. So this one was kind of choppy. If y'all were watching it play out, I sent it in the live sessions group. So what I was actually looking at was two things. So overall, oops, we were in this downtrend right here, right? You see this bearish trend? And I saw this here. You can see these little highs. You see this bullish candle up to the highs here. I noticed price ranging at this 50%. And then once it had this bullish move up, bearish engulfing that broke the structure. So you see how it broke structure here, right? Price made a new low. Once it came back and retested, I actually sold right here. So I sold here, price was in profit, came back up, and then eventually fell down. So hopefully y'all made money on that if you saw it in the group this morning. The entry was here. Stop loss was above the high. Let me see what stop loss I gave y'all. Okay, so I gave y'all this stop loss here. And then you can see price came down. Well, at first it came down about 25 to 28 pips here, retraced back up, had a little bit of drawdown there, like 7 pips, and then dropped pretty nice, about 88 pips here. So hopefully y'all took that trade right here. US 30, I took a loss on. So you can see I said took US 30 short. And I'll show you what I was looking at here. It actually wicked my stop loss and then dropped really big, unfortunately. Well, I came back now, but okay, so I was looking at this as right at about the same time. So I was looking at this right here, this down move. See these equal highs, this little down move, bullish move up, price traded under it, and I took a scalp sell here. Everything was looking good, and then price shot back up, hit my stop loss above this high. I should have made it risk-free, but I thought it was gonna drop a lot. And then, so I hit my stop loss, which was right here above this high. So you can see price was in profit about 200 pips. So definitely should have made it risk-free. But again, like I said, I entered during US session and then went to sleep, went back to sleep. Everything was looking good. Woke up to my stop loss hit and I saw price was way down here. So a little bit unfortunate there, a little whipsaw to take me out on Friday. So yeah, you can trade on the minute chart for sure. This works on every time frame. Yes, risks. When I say risk-free, I mean make it break even. Yeah. Okay, let's go look at GU. And I recommend, so on US 30, I always tell you, make it risk-free after like 30 pips on like regular currency pairs. US 30, I mean, if you want to be careful, you could do the same, but 30 pips on US 30 is nothing. All right. So GBP USD. Nice little trade here. All right, so what we're looking at here would be this down move, bullish move up. You can see this little trend line here, right? And you can see how this is bullish. So obviously it's bearish overall, but bullish here, higher high, higher low, higher high, equal lows, higher high, equal lows, equal highs, and higher high here, higher low, and then ranging. What I was looking at, again, I'm trading the 5-minute live on US session. I saw this, this down move and then bullish move off of this trend line. So retail traders are looking for this to continue up. This is their support, right? So they're looking for buys. This is a trend line, 1 touch, 2 touch, 3 touch, this 4 touch, they're buying here. Retail traders are buying, 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 and then boom, get taken out. Okay, so if they're trapped along here, we know, okay, price broke structure. Here's our imbalance, little bitty wick there on the left. And then to the wick below, which is here, and then obviously down here. So this whole area is really imbalanced. And this break structure, you see how price made a lower low here? Okay, and then the retest up here is where I took a sell. And that's your sell entry. So it filled the imbalance. You see how it retests this bullish candle, right? The bullish candle off the trend line there. That is the sell. So your short would look something like this. We're selling here. Your stop loss is above the high. So you could do these, the high above this candle is what really matters. But if you wanted to be safe, you could go above this high. And then you could see we had a nice sell off during US session. So that was 160 pips there. So if you entered here, this trade came down 162 pips over the course of 6.5 hours, and then started retracing back up to end the week. Okay, I find it hard sometimes to find the sniper or kill shot zones. Could you please go through these steps, how we would find it? Yeah, so you just have to look at major retail levels. So let me go find one. Let's go to the higher time frame. All right, let's do this one, since it's a little bit difficult. Okay, so right here, we have a bullish trend, right? We all can agree that this is a bullish trend. Then we start seeing price consolidate, right? Consolidate. Right here, we note we have equal lows. There's 1, 2, 3, 4, 5 wicks right there. You'll see that 5 equal lows. Now, what's below equal lows? Sell stops, sell side liquidity. Under here, so if I just draw a box, under these equal lows is going to be liquidity. Now we know it's a bullish trend, we should be looking for buys. What we do is after we identify the structure and then we identify this liquidity, we sit back and wait for an institutional setup. So this is the 1 hour time frame. We would have waited, and then we see this. This right here is going to entice retail traders to be selling and is going to hit these sell stops. Do you see how bearish this looks? Retail traders are looking for this, right? Just blowing through these lows and keep going, or they're looking for this, a retest and continue down, right? Do y'all agree? That's exactly what y'all would probably be doing, right? You're looking for sells because this big bearish candle through the lows. All right. So then we're like, okay, they're grabbing liquidity. So we know that right here, this candle under the lows is grabbing liquidity. Then we're still waiting. Just because it took out the lows, it hasn't created a institutional setup yet. So we wait. Okay, now it looks like price is coming back up. This is where we want to start watching, because once price closes above the down candle that grabbed liquidity, that's where we are going to look for entries. So we're going to start identifying this area here. All right, right here, price closes above, right? So we know that this is the candle that grabbed liquidity. And again, we can enter at the open or 50%. So it's not valid yet. Let's delete all this. Right? It's not valid yet because price just closed above. Yes, this wicked up and down, but once this big bullish candle closed above, that's when we want to start entering on the retest. Okay, so now we would start saying, okay, we're going to wait for price to retest here. We can round our numbers. We can make it 25, 30 flat. And let's do 80. Okay, so that's our entries, but still we have to wait. You can put buy limits there, stop loss below the low if you want, or wait and look for your entries on the 5-minute time frame here. And then bam, the next hour candle, big spike down, hits entry 1, hits entry 2. Go ahead and move up a candle, immediately rejects pushing back up. Okay, so if you entered here, you would have had about 15 pip drawdown, price currently up 30 pips. If you entered at the 50%, 3 pip drawdown, price currently up 40 pips. And then your trade would be instantly in profit, okay? Does that make sense? Grabbing liquidity. You see, before we looked at this looked super bearish, right? It's going to entice retail traders to sell, right? Because we are visual people as humans. We look with our eyes, oh, wow, that looks super bearish. I'm going to sell. They don't want to miss out on it. But we know that they're just going to be grabbing lows, grabbing those sell stops below the lows, and then shooting price up. So that's what you would have been looking for. And if we go back and look, you can see price created or still went with the bullish trend. So you can see it's still bullish, creates that setup against the trend. This liquidity helps this bullish trend continue. So hopefully you can see that. Does that make a little bit more sense now? Or does that answer your question a little bit? If that red candle that took out the low was a green, yes. So, well, this is technically a kill shot. So this, it's kind of ugly because it's just a little like push back up, but this is support. This would be retail traders trying to buy off of support. This would be the down move to grab liquidity. So this is a kill shot. If this was a down candle and then bullish engulfing, it's a sniper. But this one, it's a down candle and it took 1, 2, 3, 4 candles. But you can see, don't like spend too much time worrying about kill shot or sniper. You need to spend time worrying about, is it grabbing liquidity and reversing? The entries are the same. It's just what candle pattern is it? How did they do it? Okay. So let's go look at some of the homeworks. Okay, main thing. Yes, main thing is identifying the liquidity. All right, so this one, we took a buy and then it ended up breaking through. If y'all remember, we took that buy at the 50%. Price came up a little bit and then came down. So this was correct. It just didn't play out very long, unfortunately. but you have the right idea. Um, all right, so this is nothing here. I think you're looking at it a little bit backwards. So this is just a down move here. The actual entry you can see would be this. You see these highs? Bullish move up, price trading under it. You'd look for entries here off of this bullish candle. And then maybe equal highs here, bullish move up, price trades under it. Maybe you take a sell here as well. And then equal highs, bullish move up, bearish engulfing. Maybe you take a sell here as well. So this entry that you circled should be off of this candle here, not this box. Okay, and then this entry here is off of this candle here. This entry here is off of this candle here. So definitely want to go back and look at that. All right, this one is correct. So here's your lows, down move, bullish move up. You would measure the 50%, which looks like it's about there. It looks like you did that right. Okay, I see right. 50%. So that's a good one. So that is correct. This one here looks good as well. I think it got blown through though, if I'm not mistaken. Let's go look. Because we had that one here. Okay, yeah. So we were looking for potential sell here, but do you see how it just kind of like spiked down and then range? That's going to give you, that's the reason why I told y'all that I wasn't taking it. And on the webinar, I was only really focused on EU because if this was a valid institutional setup, it's usually going to reject and then not come back. So it should reject here and then pretty much trade away from it. It shouldn't just range there. But aside from that, that was the right idea. But okay, it says 1 hour OB. So you should actually be looking at it for at the open or the 50%. It should not be up here. It should be at the bottom of the candle. All right. All right, GBP CAD. So this one's gonna have a lot of wicks. I always tell you I'll stick to the majors. So this one, you can see that's a valid entry. Here's your sell on the first retest. Price trades down. And this is where you would try to make it risk free. So if we look, it dropped 60 pips here because it went from 712 to about 706. So you should have sold there, made it risk free, especially when price didn't break those lows. So it just started going up from there. It probably would have stopped you at a break even. The idea is right. It just didn't play out very long either. But you can see how it grabbed liquidity, traded down, retest, played out good, but then also look down move, bullish engulfing, right? So it's kind of creating a setup on top of your entry. Okay, looks like the same chart again. All right, on this one, I don't really see a bullish move up, bearish engulfing. To me, it just made equal highs. So this high here created equal highs. So I probably wouldn't have sold there. The only like potential sell, it might be on another time frame, is so maybe there's an entry on the other time frame there, but I don't see one specifically on this time frame. And then you see these equal highs here, bullish move up, bearish engulfing. I would have taken a sell here on that retest right there, little wick. All right, this one looks nice. You have equal lows here, lows there, down move to the lows, bullish engulfing. Take the buy on the retest. Unfortunately, it came up and then came back down again, but it doesn't look like it moved enough to make it risk free. So hopefully you just held and then took that trade up. 125 pips right there. But yeah, that looks beautiful. All right, same thing here on EU. What is it, just different time frame? What is this? EU 1 hour. Okay, well, same thing, same setup. Just, we gotta see how it's the same thing. Like, all we're gonna be looking for. All right, Euro GBP. So this one here looks okay. I probably would have looked for a lower time frame entry. So that's Euro GBP 4 hour. Let's go look and see what happened. Delete all this. All right, so you probably would have got stuck in this range. So the trade was this. Once it closes bearish engulfing, remember we can look at 50%, which is here. You can see it definitely rejected it a few times. What we could have done is go down, to the 5-minute time frame or so and looked for another entry. So we would have been looking for something in here. Don't really see anything there. Yeah, so I don't really see anything too clean. If anything, which probably wouldn't have been a trade, equal highs here, this bullish move up and then price trading under it, maybe sell the retest of that bullish candle, but not very clean. But again, if you entered on the 4 hour like the chart showed, the trade is right. I mean, it's in profit a little bit, but with that consolidation there, maybe next week it'll continue down and we can start targeting, lows in here, lows in here. So hopefully that will play out next week for you. All right, this one looks good. So this would have been equal lows, down move against this bullish trend, bullish engulfing. Right away, you would have bought there, took the trade up. So yes, that one is valid as well. So GBP USD, down move to the lows, bullish engulfing. Could have bought the retest here. And then I think this is where we were looking for our buys as well. But you can see this was the first retest. So you should have taken this trade up right there. All right. Bullish move up, bearish engulfing. Oh, I actually took this trade. Oh no, this isn't it. Never mind. I had this something similar on another pair, but this is a valid sell. Stop loss might have got wicked just above the high, unfortunately, depending on where it is. That's why you want to give it a little bit of breathing room, and then price dropped. So hopefully that doesn't happen. This one would have been a little bit risky. I would have waited for another, maybe like an entry on the lower time frame, because you can sell there because your stop loss is so small, but this is definitely still bullish. The retest here, this is still bullish, right? You see, oops, price still bullish here. Really until it broke this low is when it created the bearish move. But if you sell there, your stop loss is super small, so you can justify that if you want. All right, Euro USD 1 hour. So this is, I probably would have not taken this buy. I know it looks good, but so here's the equal lows, and then this down move through the lows, and then the bullish engulfing is here. And then you can see imbalance in there. I probably would have waited for price to do something like this. So if I knew the date, I would go back and look, but this could be an entry on the 4 hour too. So if this was on the 4 hour, if this is a bearish move down, bullish engulfing on the 4 hour, right? Because it's the 1 hour. So maybe this is 1, 2, 3, 4, and then 1, 2, 3, 4. This could be down move, bullish engulfing, and then it would have been a 4 hour entry. So that could be valid. I just don't know the exact time frame. You have the right idea though, for sure. All right, on USD CAD, this is correct. Equal lows, down move, grabs liquidity, trades above, buy the retest. Okay, same thing here. Bullish move up, price traded under it, and then you can sell the retest. Just keep in mind, you want to make sure it's grabbing, liquidity really good, which is there's equal highs there, some highs in there, so that's good. All right, and this one as well. This is the one we looked at. Here's the lows. We talked about there was like lows over here, I think. I think it was like something like this. And then we had the lows here as well. And we were looking at that. This is the down candle through the lows, price trading above. Remember, we can enter at the 50%. So that's the example I just showed y'all before I started looking at these. Yes, these are all kill shots. Every one of these so far have been kill shots that she had posted. Yeah, she. Okay, let's look at this. All right, so trying to see how you're looking at it. All right, cool. I thought you were boxing this in, but so this is equal lows, down move to the lows, price trades above. You can look for the buy on the retest. The thing I want you to look at though is, let me see if I can do like an actual straight line for once. There we go. All right, so you're looking at this as the entry. And really, so this is the down candle that grabbed liquidity. This is bullish move up, down move. We want to focus on the down move that grabbed liquidity, which would be this candle here. So you're actually looking at this is your entry. And remember, at about 50%. So I don't know how straight that is, but you're focused on this candle. It should be the candle that grabbed liquidity. That is a solid down move though. Bullish move up, down move. You can see sell side liquidity grabbed. It played out if you would have entered there, but you see how your stop loss is down here, entries up here. So you could have, avoided however many pips this is, and you would have bought here. So instead of being stuck in this, you would have had a perfect entry here, no drawdown, and took the trade up. Again, this is another kill shot. All right. Down move, bullish move up, price trades under it. This would have been your sell. Perfect wick right there, and took the trade down. That one is a kill shot as well. Here's a sniper. Down move to the lows, bullish engulfing. You see this imbalance? Look, wick on the left, wick on the right. You see that gap in price there? They grabbed all the liquidity and then boom, shot it up real big and then never came back. And then look at this, perfect wick entry, fills the imbalance, hits the sniper, and that's what created the bullish trend there. Oops. The previous setup is a little confusing. This one here. Okay, let me explain it. All right, so this is a double bottom. So it's kind of hard to see because you're looking at this price, but this is double bottom at support. This is retail traders buying. They're looking for longs here, right? If ignore this price. If you were looking at just this, you'd be looking for buys here, right? So let's clear this. So this bullish move, so this is the support. This bullish move is retail traders buying, 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 and then price trades below. Once it trades below, right, that's, we know retail traders are trapped long here. Also, there's equal highs right here that got taken out. So equal highs, this is the bullish move above the highs. And then the whole idea of the double bottom is retail traders are buying, buying, buying all through here. Price trades under the bullish candle. They're not going to go back up here and release the liquidity. They're going to hold price below, which is our sell entry there. And that's why that stop loss is above the high. So they really shouldn't go above here, but we have to be, a little cautious, put a stop loss a little bit higher than that. But this is, you see how they hold price from going above here. Does that make a little bit more sense? Why did we ignore the doji? This here? Okay, so this is the sniper. That would be a sniper. That's still a valid sell. But remember, the sniper doesn't have to retest. So we know that the kill shot here will retest though. And then we could also go look. So this is 1 hour time frame around the 11th. Let's go look at it real quick. Because it might be like a 2 hour setup. AU, 1 hour on the 11th. Okay, so let's look at this on the 2 hour as well. Okay, so it's still this double bottom. So it doesn't really look like anything there. 3 hour little indecision candle. And 30 minutes, nothing much. All right, so this trade is probably gonna be hard for new people because it's just not very clean. But let me kind of walk you through it. All right, so we have a bullish trend, right? Everything is bullish here. Hold on 1 second. Okay. So this is going to be support, and this is a double bottom at support, right? You can see this structure there. Retail traders looking for buy continuations. So retail traders buying, buying, buying. We're going to zoom in now to a little bit of price action. Here's some highs, and there's a high, okay? Once we saw this, we would focus on this candle. And then, oops, not that, this candle. Okay. See how they never created really any imbalance in there? So all they have to do is hold price from going back up here. Okay, so as long as price doesn't go back up here, they don't have to retest. But we know if this is retail traders buying and the institutions are selling, right, that they're going to come back and at least mitigate there and come back to this entry. So this bullish move up, and then this is where this whole move right here will be buys. So I know it's hard to see. I know it's kind of ugly, but this is retail traders buying. For sure, buy stops above these highs if they're not buying at the double bottom. And then once price closed below here, that's where we want to look for our entry. Oh, one thing I forgot to note. Oh, well, too late now, but, and you notice how price trades down, there's no imbalance. And then this big move down, you see how they create imbalance there? And look, they come right back to the wick. So the imbalance would have been wick on the left there. Oops. To the wick on the right. So this is the imbalance. And you see how they come back, hit the entry, fill the imbalance perfectly. Look, right to the micro pip. Look at that. Fill it in, and then price trades down. So a little bit ugly. It's kind of hard to see, but after years of doing this, maybe a few months, you'll be able to definitely identify those. But good job. Word of, I don't know the name. Good job identifying that, because that is valid. Okay, and then we have the same buy down here we already looked at. So this one, you see the same thing, kind of double bottom, bullish move up. It's looking like the bottom's going to play out. Price trades down. We could sell the retest here. I wouldn't have sold the retest here, although it did, looks like it held at the 50%. I would have sold the first retouch there. And Patrick, can you look at mine? It's in a drum check. Yes, I will. Okay, this down move. Oh, I see the liquidity there. Okay, yes, that one is. I don't like how it just ranged here. It should be a down move through the liquidity. Price trades above. Should go a little bit higher and then retest. With it just consolidating there, I wouldn't have taken a trade there. All right, let me go to the general chat. Nice job, Abe, on this $560. That's a US 30 trade I was trying to take as well. Very nice. Okay, where's Patrick? Okay, here we go. Okay. So we had down move, bullish move up. Was this 50% of this bullish candle? If this was, this would be the down move, big bullish move up. You see how this is all at support? Okay, support, retail traders buying. Once it trades under it, we would sell the retest. This trade is valid here. Probably would have stopped you at a break even there. And then this whipsaw here, don't know if you would have entered that. But yeah, this 50% is valid. Also, you can see this little bullish candle up here. And you see how it comes back to that as well. So yeah, it's very choppy, very ugly, unfortunately, but it is valid. So that's good that you can still see that. Stop loss might want to go a little bit above this high just in case. Other than that, yes, that looks fine. All right, this one here, bullish move up, bearish engulfing, sell the retest to the pip there, and then price came down. Looks like it almost created another setup here. Oops, I thought that was the straight line. Let me clear that. Okay. So right in here, this could have been a buy too, but this sell is still valid as well. Right there. So sell to the buy, and then it eventually broke back down. This is where you might want to start taking some profit, because you see how it took out those lows, grabbing liquidity off this entry. I probably would have taken profit there. So I would have missed out on whatever fell down here. Don't know how far it went. It could have just went here, but better be safe than sorry. But yes, that's a valid trade as well. Looks good. All right, this is the one I think we've been talking about a little bit, right? It's just on the 4 hour. Clear equal lows taken out. There, down move to the lows, price trades above. Remember, you would want to measure the whole candle. 50% looks like it's more down here somewhere. That's the buy entry there. But you have that correct. Yeah, so you see how this is on the 4-hour? So this stop loss would have needed to be below this low. So stop loss would have been below the low, entry was here. So really this stop loss should be like this, which is way bigger. Unless this wick down here, if we look for an entry on the 5-minute, the 15-minute, the 1-minute, whatever lower time frame, that's when we would, then we could say, okay, there was inside of this entry, there's that down move, bullish engulfing. So now we can make our small stop loss, which we're going to get into a full lesson on that. Don't worry. When you consider that last bearish, when you consider, yeah, so I was just trying to show him the 4-hour entry. This is probably an entry on the 1-hour time frame down here, because that is the last down candle through the lows, bullish engulfing. So the way he was looking at it, yes, because that's still this down move through the lows, but also this is the last bearish candle under the lows, bullish engulfing. If it retested there, you can get the entry. There might be a 2-hour, a 3-hour. It's really just trying to put all the time frames together and see what makes sense. All right, Euro USD. So this is kind of like the AU one that some people were confused about, but you see this bullish move up, price trades under it. It's in a downtrend. We can sell the retest here of that bullish candle. The big aggressive moves against the trend are usually going to be to grab liquidity. So this bullish move up against the downtrend is to grab liquidity above these highs and these highs. Price trades under, sell the retest. Take profit would be the equal lows right there. So take profit, you're showing it here, but take profit should be like right in here, just to be safe. So here's your entry. There's your take profit. Why are you awake? My daughter just came in here. Okay. One more. It's kind of ugly. So this bullish move and this down candle against the trend, price trades above. Yes, you could buy there. Keep in mind, I probably wouldn't have because of these equal lows. So that would have been very risky. Stop. This buy here is very risky. Yes, it played out textbook. I mean, because you can just see it. Kinsley, hold on. But these equal lows there are going to get taken out. So this could have easily went up and then shot down straight through those lows. So yes, it played out. Like you can just kind of go back and see that, okay, yes, this played out. But keep in mind, if this was in real time, we would want to be very careful taking this buy because again, these lows. See how perfect those are? And that's why this came back and started taking them out. Okay, yes. So let me go back to that. What I mean, super simple actually. There just shouldn't be a retest. So you see here, if we were going to take this as the sniper, let's say here's our lows, down move to the lows, bullish engulfing. Do you see how this is our sniper? So here's our sniper, and you can see how there's been no retest. Bullish engulfing, bullish move up, bullish move up. There has not been a wick or candle to retest yet. So when price does come down here, that will be the first retest. Does that make sense? That's what I mean by not retesting. There's been no wick or price action to come back down to our institutional candle. Does that make sense? All right, cool. All right, any other questions? I know it's getting late. I know it's Friday. Yes, that would be imbalance as well. See how there's like no real retest, there's no real wick on anything. What other topics are we going over? I posted them in the group. Let's go look. Okay, so on Monday, I'm gonna show y'all the indicator I use on MT4 and divergence. This is gonna be extra confirmation helping us enter. So just like this imbalance is giving us an extra confirmation and it's valid, we can look for entries and extra confirmations when we have the indicator lining up and when we have divergence. And then I'm gonna teach you some seasonality. If you don't know what that is, it's like the 20-year average of price action. It's gonna give you a guide on kind of what price should do because it's been doing it the last 20 years. It's probably gonna continue to do that. And then we are gonna just tie everything together and do a lot of Q&A, full analysis breakdowns, and really just trying to make sure everything is done. For the homework, I don't think y'all really need to do any. If you want to mark up the imbalance, do it. It won't hurt, but I would look for snipers or kill shots that have imbalance next to them if you want to identify that. I know imbalance is pretty simple, so if you don't want to do it and you think you have it down, no questions asked, then I'm not going to make you do it. But if you want to do it, I will definitely go over the homework as well. Will probably be Sunday. I can go over it in the group chat with you, and then if not, on the webinar Monday. All right. Well, everyone have a good night or good morning. I'm going to bed. Got to wake up early. Headed to Houston in the morning. Everyone have a good night. If you have any questions over the weekend, I'm always on my phone. Feel free to tag me in the group. If you're back testing stuff over the weekend, send screenshots to the group. I will be there to answer your questions. So even though we don't have a webinar, I'll still be in the group with y'all.